Welcome to Ring the Bell Investing with the Masters of Marketocracy. I'm joined tonight by Glenn Brownworth and John Archer. And John, great to see you. I know you haven't been able to make it recently, so it's great to have you back in here.
It's my pleasure, Tony. I'm glad to make it.
Yeah. Uh, we're going to start, as we always do, talking about the market and stocks, of course. But, with the way the market's been, what are you guys favoring right now? And I mean, it could be anything. Is it bonds? Is it equities? Is it cash? Is it a certain area of the market?
Well, I like technology, and the technology high flyers have been doing okay. Nvidia's kind of come back. We're gonna get to Google in a while, but they've done okay. Microsoft's doing really well. 365. They basically control the whole market for that. I think if you wanted to be more safe or conservative, you could probably just be like in an S&P index right now, and maybe a little bit in some T-bills. Kind of spread it around right now. But still, I think even with chaos that's going on in the economy right now, I still think that the companies that make some of these leading edge technologies, they're still in the lead, and I think that's an advantage for our country, despite what's going on.
So you believe in the American excellence in our
Well,
companies.
I don't know about that word. But yeah, I do believe that we make something that everybody wants, right? We make widgets, whether it's computer chips or smartphones or, search engines. You know, people want that. Microsoft, Google makes a search engine that everybody uses. And what I heard is that Microsoft offered Bing to Apple for free, and Apple was like, "We don't want it. We don't even want it for free," because they're so used to what Google does within their system that they don't even want it for free. So yeah, I think
Well,
even our tech right now is still superior, but we'll see how the market pans out.
all right. All right. John, thoughts on what you would be favoring right now?
Yeah, I like large cap growth and large cap tech. Uh, you might boil that down to the Magnificent Seven, but they've been leading the market, and I think they'll continue to do so. We've got companies that are 90 billion in revenue, and they're growing their revenue in double digits, almost unheard of. And I like the fact that we can get large cap with super growth, super good growth.
Good, good. It's interesting to me that you guys are both pretty much aligned right there. I'm more focused on some value plays, although there are some areas that I like Meta. I think is very fairly valued right now and has some good upside opportunity. But I'm looking at a lot of other value plays as well. I want to make sure I'm buying companies that have reasonable PEs right now, because I'm still not sure where the market's going. We're going to talk about that in a few minutes too, but let's move on to the second question about the economy. The Fed held their meeting yesterday, and they are just holding tight. They're not cutting, they're not raising. They're certainly concerned about possibilities of inflation with all the tariffs. How are you guys feeling about that? Obviously, the president is not happy. He wanted to see them cut, but how do you guys feel about where interest rates are and where they're going to go? Glenn, you want to start that one?
Thank God for separation of state and Fed, because I think the 50 people who run the Fed, they live in each state. They can see how much eggs are costing, but that's also because they had to call the chickens because they're all having diseases. So that's one thing. The other thing is, I just think that the Fed governors know what's going on, and just dropping the exchange or the interest rate every time that the president asks for it, eventually it will be negative 10%. And you can't keep doing that forever. And I think right now, like John says, like these companies are doing pretty well despite the chaos that's going on, because they're still making a product that people want, especially with subscriptions, or like Microsoft has subscriptions, the advertising model. people are still making money off of it. So, the proof's in the pudding.
So where do you feel that the Fed should be? Are they in the right place right now?
It's hard for me to second guess those guys, but I would actually err towards being with them, towards politicians, because the Federal Reserve has access to such timely data, and they always can see what's going on better than most people can. They have, a bird's eye view of what's going on, and I think they can see farther out than other people. And I think
yet they usually move too late.
It's true.
And that's the criticism being thrown around Wall Street right now is they're going to move too late again.
Yeah.
So, John, what are your thoughts on that?
Yeah, I think the Fed is gun shy. Back in 2021 or 22, whenever it was, they let inflation get away from them. And I think they're maybe overreacting a little bit. Inflation's only a little bit over their target range. I think it's 2%, and inflation's been in the 2.4, 2.2 range. So it's not really that far out of the range. But I think they're going to hold rates for a while until they can just make sure that inflation is not going to, rear its ugly head again.
Yeah,
that's definitely what it's looking like. Yet the market has expectations now for 4/4 point rate cuts by the end of the year, which means a whole point. So, I don't want to jump into one of our next questions, but thinking about the next Fed meetings, whether they move or not, might move the markets a little bit. Based on what they do or don't do again. But let's talk about a stock right now that's been talked about a lot in the last few days, and that's Google, Alphabet. They've been going through a court case for over about a year now. The ruling was actually made a while back, yet yesterday it was hit hard based on the news reports and thoughts about them having to stop getting the revenue from Apple that they are. And it could affect Apple as well because of monopolistic practices by them using their search just for Apple, or Apple using theirs exclusively on the Apple phones. So how do you guys see this playing out? Google's, I look at it, and it was only about a year ago, Google was trading down around 75. Then it traded up toward 200. Now it's back at about 150. And Apple, of course, can be affected greatly by it too. You guys are both big tech investors, large cap, and we were just talked about that. What do you think about where we're looking at Google and Apple going in the near and distant future? Glenn, you want to jump in there?
Well, the one thing is, if Google is forced to sell Chrome and they force them to split off the business, who are they going to sell it to? Right? Who are they going to sell Chrome to? And the thing is, Microsoft's browser Edge is actually based on Chromium, which is Google Chrome. So they might maybe force them to open it up somehow, but who are they going to sell it to? And the thing is, they make a lot of money off their advertising business. So I think the government wants to force them to have an API to use their search engine or something. Like, how does this? I don't think this really. I don't know. It's very difficult to kind of pull those pieces apart, but I don't know. Google was up today, almost $3, so I don't think it really had that much of an effect on them.
Bounced back a little bit today, for sure.
Yeah. So,
John, any thoughts? Any thoughts on Google or Apple here? How this is going to play out?
You don't necessarily have to sell Chrome to somebody. You can always spin it off into its own public company, I suppose.
Yeah.
I think Google's going to be okay. I think it's got enough different things in the fire to keep the company, and it's not going to. I mean, obviously, it's not going to be the former company that it was, but I think in the long run it'll be fine.
I agree with you, John. I think it's got a lot of things going for it. YouTube is the hottest property out there. YouTube TV is becoming more and more popular. And I think it'll be fine. If it is broken up, it could be worth more than it is together. but I think that I think Google will be fine, and I think Apple will be too. We could see either or both drop a little bit more over the next couple of months, but I think in the long term, they're still good, solid investments. So we're in May now. The market's been very volatile. Yeah, we've been coming back here a little bit the last week or two, a couple weeks actually. And there's an old adage, but it hasn't been holding true a lot recently. And the old adage, of course, is sell in May and go away. Is it in play this year? Do we sell in May and go away? John, you want to take that one first?
Yeah, I think most of us at Marketocracy are long-term investors, and I think you just have to keep a long-term view of the markets and the stocks you own. And I think if you're buying quality stocks, uh, in my case, large cap growth, large cap tech, I think you're going to be okay in the long run.
I agree. And Glenn, you're shaking your head. Anything to
Yeah.
add to that?
Yeah. I mean, like John says, you're in it for the long term. Hopefully these companies they're well run. They're making money hand over fist, despite the way the economy is. They have dividends and, they're doing well, even despite everything that's going on. And, as long as you're diversified, you don't have too much in any one technology company, then you're able to sleep at night, and you could go away in May and you'll be able to sleep at night on your summer vacation.
I hope that means you're sleeping good, Glenn. I know we've talked about diversification a few times. So,
Oh yeah.
hey, I agree. First of all, everybody at Marketocracy is more of a long-term investor. We try to buy good, solid companies and hold them. I will say though that if we keep running up the next 2 weeks into May, I may be putting uh, some options into action because I do believe we could pull back a little bit this June. I think this June, the old adage will be in play, but it doesn't mean you have to sell everything. You can sell some call options. You could buy some put options. You could just trim a little bit if everything's run. So I think in this market, you have to take a look at it. And it goes back to, the first question. That's why I'm in value plays too. I believe in them for the long term. And I don't think even if we get a pullback or a little recession, that they're going to get hurt too bad, as opposed to some of the high flyers. With that, let's move on to our last question today. And that is, if you had to buy one stock today, what would it be and why? Glenn, you want to start with that one?
Well, I'd like to say that my pick last month for Micron has done actually pretty well, because I think our meeting last month was April. Oh, when was that?
17th, April 17th.
Let's see here. I think they're up. That day they were closed at about 67, so 14% in a month. That's not too shabby. I'll take that.
That's good, but give us
yeah.
another one that's going up 14% the next month, Glenn.
Well, I'll go sacrifice a chicken and look at my magic crystal ball here. Well, right now I'm kind of looking at Palantir. They seem to be doing very well for what they've been doing lately, and they've been down for years, but the last 2 years they're doing really well. And they're up like, I don't know, what is it, like about let's see, year to date percentage.
That's a very gutsy call there, Glenn,
Yeah.
because Palantir has been a high flyer. They
Yeah.
have been off the charts running here recently, although they pulled back a bit, and they're still trading at a very high PE. It can go either way on Palantir, but I know that you're looking at it based on what's going on with the company and
Yeah.
some momentum. So,
Well, I think what's happening is in Europe with the war going on, and a lot of countries are seeing how the Ukrainians are actually using Palantir they're controlling. Palantir is being used as a battlefield management system by the Ukrainians, and other people can see it, that it's actually working and it's dynamic. So I think that's why even though it's from the US, it's still a very powerful platform that people use. So I think that's kind of why it still has a lot of ways to run.
All right. Thank you, Glenn. John, what would your pick be?
I'm gonna continue on my theme of large cap growth, large cap tech. I like Microsoft for the long term, and it's got its fingers in so many pies. As Glenn suggested earlier, it's got subscription revenue just off the charts. It's a low risk, could be a little higher return if you buy on a dip, but I like Microsoft.
That's a good solid pick. I like Microsoft as well. I'm going to go back to what I feel is some value right now, and I'm going to say Whirlpool. It's been beat up. People are certainly expecting a recession. A lot of people are. So it's been beat down to under $80. It closed at $79.87 today. And it's paying probably what's a scary dividend to some people because it's been beat down so much at 8.76%. I think even if they cut their dividend, you're going to have a healthy dividend. But I think as we see the economy turning back positive, and it's still pretty strong right now, that we'll see Whirlpool growing again. I think it's a good, solid company. A lot of products made in America. They're a worldwide company, though. So you have the benefit of international and America. And they own so many of the major brands that people buy, not only Whirlpool, but KitchenAid and so many other brands. So yeah, I'm going with Whirlpool today at under $80 here.
How will the potential tariffs and the supply chain issues affect a company like Whirlpool, since they probably use a lot of parts from all over the place?
But they are making a lot of things in America here. So I'm sure that it will affect them partially, and that's part of the reason they've been beat up. But as we're working through that, I think we'll get relief from that, as well as because they are a big American company, as well as they're selling around the world. So there's a lot of other sales besides US too.
Yeah.
Thank you, gentlemen, for tonight. I hope our viewers have enjoyed another podcast of the Marketocracy Masters. For more investing information, make sure you visit our website at marketocracy.io. And to learn about our masters and their model portfolios that you can invest your money alongside our money, visit marketocracymasters.com. Thank you again. Hope to see you next month.
Yes.
I got to get